Hi everyone and welcome back to Stephan podcast brought to you by Bold. Now, rejoining me on the show is a long-time Bitcoiner and friend I've known for probably 6-7 years now, Stephan. For people who don't know, Stephan has been an angel investor in the past, I think worked in tech, and now has a new venture. And so for people who, long-time listeners, you might know Stephan. We did a podcast maybe 5-6 years ago about Bitcoin meetups. So it's been a while. Welcome back to the show, Stephan.
Stephan, excited to be here. Thanks for having me. It's wild how much time has passed since we chatted meetups. I think that must have been 2020. We talked about community building, which ended up being a very important time to talk about that kind of stuff in hindsight. It's crazy how much time passes and things develop in this space. So excited to connect again, dude.
Yeah, right. And I know you've got a new thing going with Castle, so obviously we're going to get into that. I guess just kind of what's going on in the Bitcoin world. I'm curious. Obviously, the super hot topic right now is the whole Treasury company thing. Some people love it, some people hate it, some people are in the middle. Where are you at on this phenomenon?
I think it's awesome. I think, companies upgrading to sound money is fantastic. Sure, a lot of the headlines and the buzz are around these corporate behemoths that are going all in. And so far, it's worked out super well for a lot of the big ones, right? Like Sailor, MicroStrategy, Strategy, they've done incredibly well at this. They've clearly crafted a very thoughtful financial structure and capital structure around their business. So they're not just, thoughtlessly YOLOing into this new asset. I do expect that we'll see a range of approaches there and risk management approaches specifically when it comes to this. And maybe there will be some companies that get out over their skis and, it ends up going sideways for them. But I think overall, it's a healthy trend. I do see it as companies upgrading to sound money. As Lynn Alden has talked about recently, a lot of the types of leverage that these companies are using are lower risk forms of leverage than, retail individuals or smaller businesses would have access to, right? It's like corporate debt with 10-year maturity. There's not really much in the way of like a margin call price or that a downturn in Bitcoin price could turn against them in a devastating fashion, at least in the short term. So, I think it's healthy. I think the real thing to watch for and to be avoided will be copycats, not so much of like Bitcoin treasury companies popping up in other capital markets. That's already happening. I think that's a good thing. But I think we will see more companies attempt this with other cryptocurrencies.
Oh, right, like shitcoin treasury companies. I know some of these already exist, and maybe some of them done well, some of them done poorly. I know there was one example where I think it was like a company who had both ETH and Bitcoin, and then they sold some Bitcoin to buy more ETH, and then they tanked.
Yeah,
so it was kind of like...
I don't know if that was Bit Digital or another one, but...
I think it was them, yeah.
Yep. And so, hopefully, the price responds immediately to, let those folks know that approach is not the direction to take. I could see that ending up lucrative in the short term in some instances, but, hopefully anything there is short-lived because I do think that is dangerous, bubble, unsustainable stuff to be avoided. And companies that just stay on the straight and narrow with Bitcoin will generally be in a good place.
Excellent. And so, obviously, I think this ties in well with what you're building around Castle. So, I think let's start with you. Like, what was your interest in this? Because I know you've been an angel investor and kind of advising people and stuff like that. What caused you to actually go more active and decide, okay, it's time to start? And, what's the need for this company? Why did you decide this?
Yeah, love the question. I'll do a little quick background. So, as you mentioned at the beginning, you have some experience in tech, computer science in school. I spent 10 years in Silicon Valley, got really obsessed with startup companies while I was there. So I actually spent my first 4 years at eBay back when eBay and PayPal were one big happy family. And so I was in the room, when they were putting firewall rules in place to block WikiLeaks transactions back in the day. And it's really funny to reflect on that now, with Bitcoin and the censorship resistance angle and the importance of all of that I didn't appreciate as much at the time. But yeah, became really interested in startups, just a small group of people on a shared mission, no bureaucracy, going really hard at something they believe in. And so I had a couple journeys as an early employee at companies in the cloud computing and AI space. And then around 2015 and 16, that's when I started reading the Nakamoto Institute. And that made me appreciate Bitcoin through a monetary lens and sound money and econ. And so that really just made a light bulb go off in my mind of, all right, this isn't just a tech thing. This is a monetary thing. And at that point, sold all the other cryptocurrencies I had, Bitcoin only. And I kind of tried to build a brand as a Bitcoin focused angel investor. So kind of being a person that, founders could go to if they were taking a long-term focused approach on Bitcoin, and, even being intentional about not going into some of the altcoin, shitcoin routes. And so got to interact with and meet a ton of great people through that, learn a lot of company building, made 80 or so angel investments over the last 5 years, and Bitcoin has been an enormous focus of that. So very, very blessed to have learned a lot there and got to meet great people. And then my now co-founder, Joao Almeida, who you've had on the show before previously, so he was previously CTO and co-founder of OpenNode, a Lightning payments company. And we met back in 2018 through the Los Angeles Bitcoin meetup scene where we were both living at the time. And, became friends, kept in touch over the years. He actually started this company about a year ago, and we connected around that time. And I quickly invested, loved the concept, and kind of thought it was just going to be, another company in the portfolio that I would try to support as an investor. But just found myself really obsessed with the concept and the business. And we were trading text messages every day on, sales and product and go-to-market strategy. And so eventually we decided to partner up and co-found this thing together, and moved to Miami recently to do so from Phoenix, Arizona. So the company has been called Orchestra until yesterday. And as of yesterday, we've rebranded. We are now Castle, and we are an automated Bitcoin Treasury solution. So we are not so focused on the big corporates. We're really building something with purpose for small and medium businesses that, maybe have some profits and cash flow, and they're not looking to go all in and lever up or anything of that nature. They just really want to carve out some profits, put those into Bitcoin, and kind of take a responsible long-term allocation to this asset. So we build software that basically helps them put that on cruise control. You can kind of define what you want your Bitcoin treasury to look like, and then our software interfaces with exchanges, storage solutions, custodians to kind of automate the process of making sure your treasury always looks that way, and you never end up more or less exposed to Bitcoin than you want to be.
Okay, gotcha. And so I guess obvious question that most people will ask is, why not send small to medium enterprises over to the Bitcoin-only brokerages that already exist? I'm sure this will be the obvious question, so might as well answer that.
Yeah, and I'll start by saying we love those companies. Like River, Swan, the companies that have been for so many years now, helping move Bitcoin forward, even when it was a lot less clear that Bitcoin was really going to be the one that is relevant for businesses. They've had to do a lot in terms of evangelism and education to help people understand what sets Bitcoin apart from other assets. So, we're definitely grateful to be alongside great companies like that and stand on the shoulders of giants and so forth. That we still send a bunch of people to companies like that all the time. And I think if there are companies that have more let's say, straightforward needs around Bitcoin allocation, where maybe your revenues are super predictable, and if you set up like a fixed DCA buy somewhere, that's just kind of going to get the job done, and you don't need to babysit it, you don't need to change it. Those solutions are fantastic. What we're really trying to accommodate are not only ways to buy Bitcoin manually and do DCA buys. You can do those through our platform. We also want to kind of integrate with the software platforms that small businesses and medium businesses use to enable some dynamic types of purchase strategies that haven't really been possible before. So examples of that, today Castle integrates with platforms like Stripe, Shopify, PayPal, Square. On the bookkeeping side, we have QuickBooks, Wave, Xero. And so if you are a small or medium business and you're using those platforms, you can basically just link up the systems that you already use, that you're already comfortable with, and then you tell us, for example, percentage of revenue that you would like to put into Bitcoin. And then even if your revenues fluctuate a lot, maybe things are seasonal, maybe there's a lot of volume one month, not so much the next, and things like a fixed DCA buy might have might be a small percentage of revenue one month and a big chunk of revenue the next month. The transactions that we're capable of kind of allow your Bitcoin acquisition strategy to adapt dynamically to that. We also allow you to set parameters around the holdings that Bitcoin represents. So, for example, that could be don't make sure there's never more fiat in this bank account than a certain threshold. So you could say, if there's ever more than $25,000 in our Bank of America checking, then automatically sweep the excess into Bitcoin. Make sure that it's put to work. And then the inverse of that. So if the balance ever drops below a certain amount, and that you need to be able to pay wages, pay expenses, then do the right thing there. Maybe that means liquidate some Bitcoin.
Gotcha.
And
so
similar
guess,
on the percentage of holdings side as well. There's kind of a parallel product where maybe that you always want Bitcoin to be at least 5% of your balance sheet, but never more than 10%. Then you can put those limits in our software, and it will detect if you ever bump up against those limits, kind of looking at balances across potentially many different accounts, and then allow you to take action and do the right thing.
Okay, gotcha. So as I'm reading it then, it's really, I guess the USP, the unique thing here is the automations and integrations with what many of these people may already be using, whether that's Stripe and PayPal and Gumroad or whatever. And then it's the automation aspect of, buy this much percent of my revenue, or maintain this particular dollar balance, or even maintain this percent allocation, I guess.
Exactly.
So theoretically, it's like an auto rebalancing tool as well. Like, let's say, hypothetically, the business owner wants to maintain a 75% allocation out of, his, cash and cash equivalents, let's say. That this is, I guess you could sort of automate that using this kind of tool. That's the main difference then.
You nailed it. Yeah. And what especially struck us were a couple things when we were building this. One is, especially on the smaller end of businesses, they're hustling, right? Like, they're so busy. A restaurant owner is scrambling to get the sushi ready, get the sandwiches ready. So something that really kind of lets them set it and forget it, and they know that they will adapt to whatever the reality is so that their treasury looks the way that they want. That efficiency gain and that time save is something that we were excited about and is pretty important to us. We also saw a lot. I mean, I've been excited about Bitcoin since 2013, and there were years like 10 years ago where I was stomping around San Francisco to my doctor and my dentist and my barbershop saying, "You've got to take Bitcoin, you've got to take Bitcoin." And even in some cases where they would get excited about Bitcoin and they would accept it as payment, it was still so early, and we probably are still so early, that it's pretty rare that a Bitcoiner walks into your business and is, holding Bitcoin and would prefer to pay in it. it's wonderful if it does happen, and I do think that's the future. But right now, we're still just pretty early for that. And so this is also a way where the merchant can really just kind of define on their side, what percent of their revenues they want to be in Bitcoin without being dependent on Bitcoiners coming through their checkout flow, walking through the door of their store.
The lead sponsor of this show is Bold, the best place to buy, sell, and save Bitcoin. For listeners in the US, Bold lets you secure your financial future with complete peace of mind by integrating a low-fee, Bitcoin-only brokerage with next-gen multi-sig vaults. With Bold, you can smash buy Bitcoin or set a DCA plan for only 0.99% fees and seamlessly deposit the Bitcoin direct to your Bold vault. The Bold Vault is a 2 or 3 collaborative multi-sig where you hold 2 keys and Bold holds 1 as a redundant backup, protecting against loss or theft. You can use Trezor, Ledger, or Cold Card hardware wallets to spin up a Bold Vault in just a few minutes, and the Bold Vault is the only collaborative custody vault available with 0 monthly fees. They're also offering 0 fees on your first $10,000 of Bitcoin buys and $25 of free Bitcoin when you buy $100 of Bitcoin or more. Try Bold today and upgrade your stacking experience over at getbold.io. And now, back to the show. Gotcha. Okay, so let me just understand this flow. So the idea is small to medium enterprise comes to you, comes to Castle, and what you're automating there is, let's say, pulling from their, like it's an ACH pull from their fiat account.
That's right.
Buy Bitcoin based on the rules they set. If they're a bear, maybe only 80%, and if they're a true Bitcoiner, then 100%, or whatever.
That's what
whatever
we do
percent.
at Castle, 100%.
Right, and then allocate that, and then automatically buy it on whatever platform, and then send it to whatever custodian you've selected, or do they select the custodian, or how does that part work?
That's exactly right what you just described. So it's sort of ACH driven. We interface with the fiat rails and then also the Bitcoin rails. And what we're really attempting to do is kind of be this middleware where you can think of us as software that vets,
connects the exchange and the fiat account and the Bitcoin custodian.
Yeah, exactly. So we work with multiple exchange partners. There's kind of dynamic routing to make sure that the fees are as low as possible. Working towards the same on the custodian side. So, of course, security is paramount when you're dealing with Bitcoin. So we only deal with fully regulated U.S. custodians, billions of dollars of assets under management, and adding more options there in our back end. But really, we don't want that to be something that a business owner who's brand new to Bitcoin has to figure out on day one, because we don't want that to be a barrier to entry. So we want to have safe defaults to let them get started stacking and get some price exposure to Bitcoin. We let them withdraw to any arbitrary Bitcoin address at any time they would like. So that could be your own multi-sig. It could be another custodian if you as a business owner have a strong preference there. But what we hope is to just give kind of safe defaults so that there is that onboarding to Bitcoin, and then they get that starting point in their journey there through us. Gotcha.
And then what's the fee? What's the fee you charge?
No monthly fee right now. So we went live yesterday. The state of things has been we onboarded our first set of customers in October of last year, so about 8 months now. We've had customers and businesses onboard the platform kind of in a private alpha sense to make sure that it's a great experience, that everything was solid with the core product. So since that time, there have been, restaurants, accounting firms, even some startups aboard our platform. Every time that somebody's walked through their door, swiped a credit card to pay in Bitcoin, some percentage of that, typically between 5 and 10% is what we're seeing with some of our customers. It's just been automatically going into Bitcoin. And now, as of yesterday, rebranded to Castle, and we are opening our signups up more broadly. We are live today in 40 out of 50 states, and we will be live in all 50 by the end of 2025. and our wait list is open. So even if you're not in a state, like we don't support New York yet, but if you are a New York business and this is interesting to you, would love to have you sign up, because we hope that in just 2 or 3 months we'll be able to start rolling out across more and more states as we form more and more partnerships with technology companies.
Gotcha. Yeah. All right. And so, yeah, I guess those are kind of the main kind of obvious questions that most people would have. And then from here, it's more just sort of like, what does this mean for, more and more businesses, right? If we're going to start to see now, I don't know. I'm curious to hear what you think as well, because the common perception is, hey, retail hasn't shown up yet, right? Like it's kind of been a lot of institutional. It's been like ETFs and all this crazy excitement about the Treasury companies, as in like the leveraged ones, because of how crazy the numbers and the returns are. And so, but I'm sure kind of under the hood, there has been actually, a decent number of smaller companies who aren't necessarily doing the leverage playbook, but they are stacking. And so, we're seeing all these announcements and things like that. What are you seeing so far in terms of this, this dynamic or this demographic, let's say, this small to medium enterprise level?
Yeah, it's definitely early days. It's hard to know how many companies there are out there doing this. There's at least 5,000 just based on numbers that have been shared, but the upper bound is kind of uncertain. My sense is it's somewhere between 5,000 and 50,000 companies in the U.S. Are, like, in terms of small, medium, private companies are doing this. And that's out of a total of over 34 million small and medium businesses in the U.S. And so to give you a feel for how early we are,
that's not even 1%.
Yeah, that's the state of things. The small businesses, that range of SMBs represents 43% of U.S. GDP. That's $130 billion annually. So it's 13 trillion annually in revenue terms. And so just 1% of that would be 130 billion. So there's a significant amount of implication for Bitcoin as a lot of businesses really start to think about this. And we believe they're going to, simply because they're waking up to this being a better way to save. It's kind of sad if you think about it that small and medium businesses have had to largely bear the brunt of inflation in the ways that they have for the last 50 or so years. Even though it affects all businesses, the big corporates are very sophisticated, and they have relationships with capital partners and primary dealer banks, and they've got entire treasury departments dedicated to mitigating the impact of inflation on what they do. But the small and medium folks often don't, and they just have to, they're trying to make ends meet, and the price of eggs and the price of their supplies go up, and they're kind of the furthest away from the spigot of new money creation. And so that's something that we think about every day in terms of why we're starting where we're starting in this, and excited to serve the SMBs first, is because we think it really empowers them. It finally makes it possible for them to save again, where they're not really getting pushed further down the risk spectrum and forced to do things that are really investing and really these financial gymnastics, when all that they want to be doing is saving. They want to be protecting what they've already worked so hard to earn. And the savings accounts products that they use don't really. I think that's that's something that we just need to meme into everyone's heads. Savings accounts don't. They've just been fundamentally broken for a while now, and we're finally realizing it. So the numbers look fine in terms of nominal returns. You might be using a high yield savings account that gets you 3 to 5% annually, and that looks fine enough on paper. You might think you're getting ahead, but once you factor inflation into that and you start to look at the real return, the numbers don't look so good. You realize you're not actually getting ahead. At best, you're typically just staying in the same place. And
yeah, exactly. Yeah. I mean, this is like, you see that work from Matthew Mazinskis, right? And he's got the base money expansion rate, and it's like, calculated since like 1969 globally. I think it's like 12.7%. I think that was from like 1 quarter ago. But still, I mean, this is, if you are losing 12% of your money every year that you put in a savings account and you're earning 3 to 4%, well, really, you're losing 9%, right? So it's just crazy.
100%. Yep. And thanks to the internet and, X and Noster and education, podcasts like yours, people are learning about this. They're learning about not only how they're being shortchanged and how the playing field has been tilted against them for a while, but also about this new option that they have to really opt out of a lot of that nonsense and not just stay where they're at, but actually get ahead.
Yeah, and I'm reminded here now, this is like everyone's heard these numbers, or maybe some people haven't. So I just had a quick search. This is small business failure rates in the USA, right? So this is like a super, I don't know, you're probably familiar with these numbers, right? Approximately 18 to 24% of small businesses fail within their first year. Within the first 5 years, the failure rates are more like 45 to 50%. And within the first 10 years, 65% of small businesses fail by their 10th year. So, I mean, that's brutal, right? Like, so it just shows you how much turnover and churn there has been in that small business segment, and how much more powerful and valuable would it be if people could be using Bitcoin as their savings asset, as their capital asset, whatever you want to call it, and actually have a chance to survive.
100%. There's a very important empowerment angle to it there. And, anecdotally, I've had friends from the tech and the startup world, kind of do big shifts and go like quit tech, go open restaurants, go open gyms, things like that. And it's eye-opening, when you have people close to you in your life who tell you about that, and they say, I've never worked so hard. Like, you really have to love it. Otherwise, it is grueling. The failure rate is so high. The churn with like the wage expectations of all of your employees go up alongside inflation. And so you really have to hustle, and it is exhausting. And I've had friends say, I've had to work 10 times as hard going and opening this small business as I did working in big tech for, not nearly the same compensation. So it's, something is amiss. And I think fixing the money will be not all of it, but a very important part of it.
Yeah. And it just makes you wonder if all the small and medium-sized businesses actually could save and were saving with Bitcoin, and not just kind of piddly 5-10%, but like actually going hard with Bitcoin as their reserve asset, what would the real failure rates be? Maybe a lot less. Maybe they would actually have a chance, because now, instead of just kind of having, maybe after like one bad year you're wrecked, now if you've got like a Bitcoin reserve that you've been stacking and saving for some time, now, if you have a bad year or a bad quarter or whatever, you can sort of take stock and be like, okay, look, well, actually, unfortunately, we might have to actually sell some of our Bitcoin to, to make it through, or maybe they borrow against some of their Bitcoin or whatever. Yep. But it gives them it gives you a fighting chance, right? Like that you could actually take a few hits and have a fighting chance to actually survive that, instead of like, oh, I've taken a few hits, had a bad quarter, had a bad year, now I'm out of the game.
Absolutely. Yeah. It's in our view, the best monetary technology to run a business on. And of course, being cognizant of where we are in the adoption cycle. So we are, as believers in Bitcoin as we are, and, we at Castle, we do put 100% of our revenues into Bitcoin, and we just raised $1 million pre-seed that we announced yesterday from partners we're really excited to have believing in this mission. We're putting a significant chunk of that into Bitcoin. So, skin in the game, we absolutely want to practice what we preach. But at the same time, when we talk to businesses that are brand new to this, making sure that we are being responsible stewards of Bitcoin and not going to get them into any position that is risky for their business. So advocating for starting small, even 1%, get them familiar with it, experience some number go up, learn a little bit more about the why, And then it's much easier to go from 1% to 10% or higher once you're ready and once you're comfortable than it is to kind of get off zero and go from that 0 to 1. So we're not wanting any businesses to get over levered to do anything that would be detrimental to their business. We want this to be something that can fuel their growth and their expansion. And what drives us is, hearing, wow, like we were able to consider opening another location sooner because we've started allocating to Bitcoin in a meaningful way. We were able to, to just do more, sleep more easily at night because we feel diversified, and we feel like we are part of this modern future of money and we're not missing out. That is the kind of stuff that's important to us, and kind of our North Star.
Yeah, interesting. And so, I mean, I'm with you in that sense that, there's one aspect of, let's say, ideology, right? Many of us came to this as libertarians, maybe some or many Bitcoiners are cypherpunks. So we have many of us come from that ideological perspective. But even if you set that aside, just looking at it neutrally as a technology, just sort of objectively over the, last, 5-10 years, like if you've been able to zoom out, even if you didn't hold that libertarian ideology, you just sort of objectively saw, hey, this is just a better technology. I'm just going to use the better tool for the job.
Absolutely. There is a slide in a talk that I do at Bitcoin meetups sometimes, and it's a little bit tongue in cheek, but it's like, what do these three things have in common? Leaving your garage door open overnight, installing, running an old computer like Windows PC with no antivirus, or holding fiat and holding bonds. And in all three of those cases, you are making it easy for your stuff to be taken from you because you're just not using the best form of technology to protect yourself. And that's really just how we view this. We see it as an upgrade. It finally is a way that you can get supply side assurances on the asset that you hold that are absolutely unprecedented. It has never before been possible to acquire something and to know with perfect certainty that you have at least a percentage of that asset globally forever for the next 1,000 years. Even assets like gold and silver that have historically been hedges against inflation. Yes, it's much harder to dig those out of the ground. The government can't simply print them out of thin air like they can with fiat currency. But even those assets, like precious metals, don't offer the same predictability around supply. We never know when we're going to trip over a new $1 trillion deposit of gold in the Earth's crust. We certainly don't know how much Elon is going to find when he gets better at all the asteroid stuff, and how much is in the solar system. And there's even a funny framework there where you could think about holding precious metals as almost a bet against technological innovation in some ways, because it's almost betting that we are not going to get good enough with tech to go up and get more supply of these metals and of these assets. And if we do that, then it's a threat to the people who hold it and who store their wealth in it. Much like maybe the holders of seashells were betting against circumnavigation and sailing to get good enough for superior forms of money to kind of invade their economy, like silver coins hundreds of years ago. And so there are some interesting parallels there, I think, to consider. But yeah, Bitcoin, just, the supply can never be more than 21 million. In practice, maybe it's more like 18 million if a few million coins are already permanently lost. And we've never as a species experienced anything like that before. And I don't think it's at all priced in or appreciated yet.
This episode is brought to you by CoinKite, the makers of my favorite Bitcoin hardware wallet, the Cold Card Q. Now, some people think self-custody is too hard, but it's really about taking responsibility for your Bitcoin wealth and understanding that self-custody gives you a true feeling of liberty. The Cold Card Q has a full keyboard and big screen. It's got 2 secure elements and a true air gap, allowing you to go fully air-gapped using QR codes from seed generation to transaction signing. You can power the device using 3 AAA batteries, so you don't even have to plug it into the wall for power. You can easily use it with Sparrow Wallet for PC or Nunchuck on mobile, and you can dial it into the right level of security and complexity that you choose. If you want a simple setup, just use 12 words and single signature. If you want passphrases, easy. If you want to add multi-sig or co-signing features, you've got those too. So go to coinkite.com, use code Livera to get 10% off on your cold card or other devices and level up your self-custody today. This episode is brought to you by Galloy, builders of banking software for the Bitcoin age. After years of risk and uncertainty, Bitcoin and banking are colliding. The regulatory environment is rapidly shifting in favor of Bitcoin and digital assets. Fintechs and crypto-native companies can become chartered banks, and traditional banks and credit unions will launch Bitcoin products. But the legacy core banking software that many financial institutions run on wasn't built for Bitcoin. The Galloy banking infrastructure stack delivers all the key elements of a modern core banking platform, with cloud-native infrastructure, event-based architecture, and robust APIs coming together to meet the security, scalability, and reliability needs of banks of the future. Whether you are launching a modern financial institution from the ground up, or you are adding Bitcoin-backed lending or payments to your product offering, talk to the team at Galloy. Visit galloy.io or reach out to the team at biz@galloy.io. Now, on the investing side of things, the common, and what I find interesting now, and maybe this is changing now in the kind of the treasury company, especially the leveraged treasury company paradigm, but I'm sure you thought about this even in your, let's say, angel investing days, right? In this kind of VC and angel investing, the common question would just be, well, if you're a Bitcoiner, are you betting on this company outpacing Bitcoin? And that's like an extremely hard thing to do, isn't it? Right? That many of these companies may have well done in fiat terms, but not returned in Bitcoin terms. How are you thinking about that nowadays?
Oh man, yeah, that is true big time, and I definitely have supporting data personally for how difficult it is for startups to outperform Bitcoin. Of the 80 or so angel investments that I've done, not many have there's like probably maybe 10 that have outperformed Bitcoin ever, and there's of course a lot of qualitative benefits to doing that type of investing. You get to understand new industries, you get to form relationships with founders, and so there's a lot that's hard to put a price tag on in that has been extremely valuable. So even if in raw financial terms holding Bitcoin would have been better, personally zero regrets on anything, but it does illustrate that Bitcoin is this powerful new hurdle rate, and so the opportunity cost is so much higher. And if you get an angel check as a startup from an investor who understands Bitcoin, I think that actually should maybe hit harder in a way, because it's like they're
what they're giving up. Right?
Exactly. They know what they're giving up. Yeah. And I think it'll be an interesting 5 or so years in venture capital and startup investing, and maybe even private equity. I haven't thought as much about like how Bitcoin penetrates that world, but I could see a future where not only will Bitcoin be the rails that investors will use to like transfer funds to do an investment, but actually having contracts denominated in Bitcoin. Maybe you have these like safe documents or equity rounds, and some of the investment money is actually papered as Bitcoin, and some of what you are entitled to legally could be denominated in Bitcoin. And that could provide this interesting incentive for the startups to hold at least the funds that you are giving them as the Bitcoiner in Bitcoin terms, so that they can kind of match that, what would be almost like a liability on their balance sheet. So I could see that becoming a lot more common, and it's there are definitely firms like 1031, I believe, has been doing a lot to kind of move the needle forward on thinking about Sats flow and Bitcoin denominated returns, and just what a future of venture capital is that is based in Bitcoin. And so it's exciting to think about just how Bitcoin is going to become the standard for all that, even in VC.
Yeah, it's fascinating to think about because, as you said, 1031 is doing some of this stuff. I know the early riders guys and
Yep.
kind of connected with OnRamp. I know they're into this as well. So they've got like a Bitcoin denomination aspect of it. We see this even in the life insurance, right? So there's Meanwhile. I've done some interviews with them. They're doing Bitcoin life insurance where it's literally you contribute in Bitcoin and the payouts, the life insurance is in Bitcoin. There's AltPG, so the blockchain group. They're doing one of the Treasury companies. They're doing like Bitcoin denominated bonds. And so they're like raising capital in Bitcoin. Now, I think that has like an equity conversion aspect of it. So it's not 100%, but it is kind of Bitcoin denominated. Even I believe Blockstream mining node, right? So we've seen a few of these things, but I think it's the question is more like, how does it become pervasive? How do we all start to really think about this? I would say there's been a shift in thinking on this. Like, of course, like the people who were like super hardcore Bitcoin only from the early days, they kind of got this early on. But I would say even in Bitcoin VC world, it probably wasn't as commonly understood as it is now, because at that time, maybe years ago, and I'm sure you can speak to this, right, from like VC and angel world, it might have been seen like, oh, your company, they just did a big raise. And even if they were a Bitcoin wallet or a Bitcoin company or something like that, it might have been seen as quote unquote irresponsible to go all in Bitcoin with that treasury money because, you know, Bitcoin was more volatile in earlier years. And so it might have been seen like, you know, maybe you should put some of it into Bitcoin, but not all of it because that's irresponsible. Whereas nowadays it's almost seen like, you know, the Michael Saylor kind of thing, only keep the money in fiat that you're willing to lose kind of thing, because, you know, anything that's not in Bitcoin, you might lose that. How are you seeing that now as an angel and kind of, you know, in this kind of VC and angel world?
It's absolutely trending in that direction. Bitcoin is becoming much more acceptable as a balance sheet asset. Startups are really interesting for that because unlike cash flowing SMBs where you have some profits and you've got some perhaps historical revenues if you've been established a while to kind of look at as you think about allocations, you know, especially in the earliest stages like pre-seed and seed technology companies, maybe revenues are not in the picture yet. And so the only money that you have is the money that your investors have given you. Or, you know, maybe your revenues are a drop in the bucket compared to the rest of your balance sheet. And so the sensitivity to runway is much higher in startups. And so I think that is why there is an extra degree of kind of risk that's inherent and thoughtfulness that needs to be given to Bitcoin's volatility in the short term. But yes, even in the pre-seed, seed, Series A stage, we're seeing a lot more acceptance around some percentage of that, even if it's like 5% being put into Bitcoin. I think founders especially are more comfortable with this. And now what's really going to be a big theme of the next 24 months are, you know, boards and VCs and like Silicon Valley VCs that have control over boards and major decisions, even if they don't have perhaps a veto right formally. You know, it's often just a personal relationship that you want to keep in very good shape as the founder with the board member. And so if they are against an allocation to Bitcoin, the founder will be much less likely to act on that. And so I think that the needle will very likely move more in the Bitcoin direction in the next few years on it. But that's what I see as increasingly the point of friction in the conversation. It's now like the founder is pretty willing, but you know, maybe it's Series A, maybe you've got a board member, maybe that board member is not as comfortable. And so just getting consensus around the asset is a little more challenging at that stage.
Yeah, I think it's fair to say that. And also, the other motivating factor that I would have heard when I speak to, let's say, VCs, and they might have been like a general partner, but when I would talk to them, they might be like, well, I might be into it, but let's say my LPs, they might look at me and be like, well, if I'm just going to put money into you and you're just going to buy Bitcoin, or the founders that you put the money to, they're just going to buy Bitcoin. Well, why couldn't I just buy Bitcoin myself? You know, so that's maybe that's part of the conversation as well, because then either the LP, the limited partner, or let's say the angel investing into that company is sort of like, well, hang on, if you're just going to buy Bitcoin with it, I could have just bought Bitcoin myself. Why would I, you know? So then maybe there's like a conversation of they felt like they had to justify this idea that, well, we're going to need that money for the business, and that's the way we're going to outperform, and other, because otherwise, yeah. But it's kind of interesting to see that shift in thinking over time, isn't it?
It really is. And it really brings to the surface all of these relationships in across investors, like you touched on, where there's it's like the founder, and then maybe a general partner from a VC firm is on the board. But even if you get comfort on both of those, which is sometimes hard, then it's like maybe the LPs that general partner has relationships with, because the LPs are ultimately the ones giving them the money. There's this like daisy chain of kind of comfort that is required, at least to do very significant allocations of Bitcoin. And so it's more heads that have to nod in order to move on it sometimes. But 5 years ago, you would just get laughed out of the room. It was like crazy talk. And now it's sort of like, okay, it's a conversation. There are the ETFs exist. There's institutional validation. MicroStrategies like outperformed NVIDIA, or at least close on certain timeframes, close to the best performing stock on the planet. And so I think there is this awakening and increasing acceptance of it, where you don't get to just dismiss it and scoff at it. You at least have to give it an evaluation. And that is progress.
Yeah. Interesting. Okay. And so, I know you're also into this whole topic of quote unquote hard tech. So give us the lowdown on that. What is hard tech?
Yeah, man. So over the last few years, I've become really just obsessed, interested, believing in the importance of hard tech. And it's been really amazing to see a renaissance of appreciation around that, where you have VCs like Founders Fund, A16Z has their American Dynamism Fund. And in the new administration here in the US, there's this emphasis on revitalizing America's manufacturing base and our industrial base. And for a while, that trend of globalization, where you just sort of outsource everything, and the US was the land of like financial innovation on Wall Street and software innovation in Silicon Valley, but all of the world of atoms we didn't really have an appetite to touch. And I think what we've realized is that has made us vulnerable in some ways, and we've forgotten how to do some important things, and some of those areas of our economy have atrophied. And so it's been really encouraging to see over the last couple of years such a renewed interest around it. And I think those terms like hard tech and deep tech are what's usually associated with these movements, where it might be like nuclear energy, robotics, manufacturing, even like weather modification, things like that. And something that I think isn't often thought about, especially by founders who are deep in that hard tech movement, or investors who are deep in that hard tech movement, is I think there's actually an important tie-in to Bitcoin with those. Bitcoin sort of gets put in the bucket by a lot of people of just software stuff, or maybe crypto stuff, where they have it lumped in alongside all the other cryptocurrencies, and sort of this degen gambling, aspect to it. But I think really there is this importance where you could almost say that the hardest tech deserves the hardest money. And if you are going to be building these, important areas out, doing that in a society that has sound money as its foundation, and that sound money, could be Bitcoin, that is such an accelerant that I think is just often overlooked. And when builders and companies like SpaceX and Tesla and Elon, you could think about it as they move us 1,000 steps forward with the things that they build. But then in some ways, central banking and the monetary system quietly undoes some of that progress. So maybe Elon takes us 1,000 steps forward, and hard tech builders take us 1,000 steps forward, but central bankers take us 500 steps backwards. And so I see Bitcoin as this sort of overlooked important piece of that puzzle, where it allows us to lock in some of that progress for society, when you build this fantastic tech and you are growing, allocating to Bitcoin on your balance sheet is a way to just make sure that you are moving society forward maximally, in all of the ways that you can, and in the ways that you deserve to be with the innovation that you're unlocking. And so I think there's a very that connection of like hard tech and then hard money as the Bitcoin piece. There is this marriage there that is just so often overlooked and underappreciated.
Yeah, I think you're right there. And it seems to me that, well, it looks to me like a lot of tech people in the US now are pro Bitcoin, right? Like they kind of are into it, even if it's not their main thing. They might hold a little bit, or they might, loosely be in favor of it. So it is interesting to see. And as you said, keeping the gains of these big productivity enhancements, whether that's, Starlink and being able to connect to the internet while you're in flight, or whether it's, this robo-taxi stuff, and think about people being able to be productive while they're commuting, instead of having to, sit there driving. There's just so many of these examples that innovators and technologists and people just come out with ways, just like with the internet, and then all those gains get eaten up by government and government bureaucracy and just kind of money printing, and obviously the money printer, those who are closest or nearest to the money printer, they get the benefit. And so really the only way to, historically the only way to play it was to be in fiat debt, but sort of skillfully doing it, because obviously if you do it badly, you get wrecked. But if you were sort of skillful at using fiat debt and fiat leverage, you won the game in the last few decades. And I guess there's a kind of injustice of that, because on one side it's the people who tried fiat debt and got wrecked, and then the other people who were just sort of out of the abundance of caution, they never went into that, and then as a result they were either inflated away, either their savings or their salary.
Yep, I agree 100%. And so if any listeners, I know the audience is largely Bitcoiners, but if this message reaches any hard tech founders and entrepreneurs, I think just consider that Bitcoin stands apart from all these other cryptocurrencies, and it is hard money, and it is foundational for civilization. And so how your business and what you're doing can make use of it, whether it's taking payments in it or especially putting it on the balance sheet to make sure that the progress that you make for society can't be undone by wealth redistribution and folks who don't have any skin in the game and maybe not the right incentives, is I think very important.
Excellent. All right. Well, I think that's probably all the key questions I had for you. Any last closing thoughts, and where can people find you online?
Yeah, thanks for having me. So I'm on Twitter. My DMs are open. S-then-C, S-T-H-E-N-C is my personal Twitter. And you can find us at Castle. So we are savewithcastle.com and on X and other socials. Particularly if there are any SMBs in the US who are interested in making their Bitcoin Treasury strategy automated, we would love to talk to you and see if we're a good fit for your business. And it's great to connect again, man. I was scrolling through pictures on my cell phone, and I saw a pic of us from Baltic Honey Badger in Latvia 2019 the other day.
I remember that.
Thought, oh man, yeah, it's
we
been
were like out the front, and we were taking some pictures. I remember.
Yep. So fantastic to get the opportunity to come on again, and appreciate you having me.
Excellent. Well, like I've said, I want obviously I'm a maxi. I want as many people to use Bitcoin as possible. So listeners, think about if you know somebody who has a small business, or if you are somebody with a small business and you could benefit, make sure you tell them about Save with Castle. We want as many people using Bitcoin, saving with Bitcoin, earning, spending Bitcoin as much as possible. So links will be in the show notes. And Stephan, thanks for joining me.
Thanks, Stephan. See ya.